Good afternoon, everyone, and thanks for joining us here in the JAX Chamber webinar series. Today, we're going to be talking about Paycheck Protection Program and navigating how to have your PPP loans forgiven. We have two great guests today who actually were with us at the very beginning when PPP was getting started. We have Thaddeus Hammond, who's a economic development specialist with the SBA office here in Jacksonville, and we have Jim White, who is the managing partner for tax services in the Jacksonville office of BDO. When they were both here the first time, Thaddeus was telling us what was going to be available and how to prepare and apply for the loan, and Jim was talking about how to get your company ready and some early steps to take about forgiveness coming up. And now 6 months have passed and things have changed a lot. And I just want to mention that things will probably change again as they have. So everyone's given the best information they can right now. But, if Congress decides to do something or change something in the next week or so, we haven't been able to predict that. So there's our disclaimer for the day. And I will start off with Thaddeus is going to give us a presentation, and then Jim will go after him. So Thaddeus, I'll kick it over to you.
Thank you so much, Matt. And on behalf of our district director, Lakita Henderson, I'd just like to thank the Chamber for inviting us to today's webinar. PPP, or as we know it, the Paycheck Protection Program, navigating loan forgiveness. And as Matt mentioned, there have been a lot of changes since we started 6 months ago. And the PPP program, really and truly from the SBA's perspective, has been an overwhelming success. We've been able to help quite a few small businesses. Matter of fact, to date, there have been about 5.2 million loans provided and over $525 billion in funding in just a 4-month time frame. Think about that for a minute. In 4 months, we put out 5.2 million loans totaling over $525 billion. That's more than the government typically puts out in several years. Honestly, I mean, that was an amazing feat. So, and the average borrower had loans approved of about $100,000. So that's pretty neat. We reach across geographic locations, economic regions, and our rural and underserved communities to help out all industries. This pandemic, as it is, was unprecedented in scope and nature. And so with our strong partnerships, our resource partners, partner agencies, the banking community, the financial entities that helped us out have made this a success. Now, we came together with the help of the SBA, of course, the executive branch, Treasury, and the Congress. Everyone stepped up to save America's small businesses. And so to that end, these small businesses are the driving force of our economy, and they are what makes it go for us. And as I mentioned a minute ago, nationwide, 5.2 million loans, $525 billion. And in the state of Florida, there have been over 408,000 PPP loans for over $31.7 billion. And there's about $130 billion left in the program. So we're just, keeping our fingers crossed and hoping that there's another round. There's been talk of blanket forgiveness for all loans, $150,000 or less. Don't quote me on that. That is just something that's been talked about. There's talk of even more support coming in the name of another round. Don't quote me on that. Again, that's just talk that we've heard about. Nothing's written in stone. And as Matt alluded to earlier, these rules are ever changing. The dynamics of the programs are ever changing because there are just so many moving parts. So just to give you some background again on where we were with the PPP and what that meant. The PPP loan carries with it an interest rate of 1% and maturity up to 5 years. There is a deferment period of 10 months on the PPP loan now, and 100% guarantee by the SBA with no collateral. Now remember, early on with the PPP, the maturity was 2 years, and you had to use 75% of the proceeds on your payroll costs, 25% on your mortgage interest, rent, lease, and utility payments. That was prior to June 5th. After June 5th, and then of course it was an 8-week covered period, and so now after June 5th, that those numbers have changed. 60% of the PPP loan has to be used on payroll, 40% on mortgage interest, rent, lease payments, and utilities. And there's a 24-week covered period. Now you can opt if you applied for and received a disbursement prior to June 5th, you can opt for the 24-week covered period, and which then you get 10 months to pay that money back. So now I just want to talk a little bit about some of the terms you may hear Jim speak about or me talk about. Now, one is the covered period, right? What is the covered period? So it's the period beginning on the PPP loan when we have that disbursement date that goes out to the borrower, right? So the bank, your financial institution, disperses a payment to you on a certain date. That date starts the covered period, and it's either going to be an 8-week covered period, which applies to any loans, PPP loans dispersed between April 24th and June 5th, 2020. And then there's a 24-week covered period, which applies to PPP loans dispersed after June 5th, with an option to choose an 8-week covered period or a 24-week covered period. So remember, you don't have to stick with, if you receive the loan after the 5th, you don't have to wait that 24-week period. You can opt for the 8-week covered period and then request forgiveness of the loan at that point in time. Now, there's an alternative payroll covered period where the option, the borrower and the bank have for calculating the start of the covered payroll calculation. Right, so payroll expenses are the only expenses that can be calculated on a moving scale based on the start date of a business's payroll cycle. And we can let Jim get into the technicalities of all that good stuff, but that's the alternative covered period. And then we have payroll expenses. What are payroll expenses? As it pertains to PPP, payroll expenses are cash and non-cash expenses that a business incurs associated with the payroll costs. That includes salary, wages, tips, commissions, employer portions of benefits premiums, all leave pay. It includes sick leave, all assessed federal and local earning taxes. Payroll expenses don't include the employee portion of income associated with contributions, right? So what are non-payroll expenses? Well, non-payroll expenses are the things I just mentioned a minute ago: interest rate